China did surprise a lot of people with this interest rate cut. It's second in a month, by the way. And as you mentioned, the People's Bank of China lowered its one-year lending rate to 6%. This is a decrease of nearly a third of a percentage point. As for the deposit rate, they took that down by 0.25% to 3% there. Now, economists definitely weren't expecting a rate cut at least until the end of July. One possible reason for the bank's early move is that Beijing just wasn't happy with export order numbers that came out earlier this week. And it's important to know that Europe is China's largest trading partner, so there's clearly an impact being felt by a slowdown on the continent there. And we can see that actually in China's GDP growth since the start of 2011. Let me just pull these up here to give you a better picture. These falling bars here show that China's growth is, in fact, slowing down. Most recently, China's GDP fell from 8.9% in the last quarter of 2011 to 8.1% in the first quarter of this year. And this figure right here, 8.1, is nearly a three-year low. Analysts are looking to next week, Friday, 7 days from now, and that's when China will release its second quarter GDP number. But last month, one government advisor said it could drop below 7%. So definitely something to look out for, Charles.
Indeed. Okay. Tell us what that meant in terms of the markets in the Asia-Pacific region this Friday, because clearly there's been kind of a bit of a yawn. And if anything, the markets reacted negatively, perhaps with disappointment to what happened in Europe. How was it over there?
Yeah, that's right, Charles. Despite those rate cuts in China and from the ECB, investors, as you can see, weren't too cheered into a buying mood, and caution is still very much in the air. The Nikkei, for example, ended down 2/3%, a sign here that investors are becoming more and more immune to monetary easing moves. The Hang Seng closed down. Actually, it just came back from a little bit of a lower percentage drop. It's down about flat. This comes as stocks fell on the China rate cut. HSBC and the Bank of China both fell about 1% there. The Shanghai Composite, though, had been down for much of the day. Financials like ICBC and China Construction Bank fell after the rate cut announcement. But take a look at this pop right here in the last few hours of trading. This here is thanks to a rally in real estate stocks, which stand to benefit from the rate cut. China Vanke and Poly Real Estate rose by as much as 5% there. And finally, the Seoul Kospi ended up being the biggest loser of the day. The benchmark closed nearly 1%, but there was definitely a bright spot in that gloom, and that was Samsung. Now, South Korean tech giant has published its profit estimate for the second quarter of this year. The company expects a 79% surge in operating profit to $5.9 billion. That is helped by a massive uptick in smartphone sales. But those sales actually fell below expectations, pushing the firm's shares down 2% in Seoul. Now, Samsung's Galaxy range has outperformed Apple's iPhone so far this year, but could suffer when the Californian company releases a new model of its phone later in 2012. Now, the tech titans are not just engaged in a sales battle, they're also locked in several legal disputes around the world, centered, of course, on allegations we've been talking about on patent infringement. And so far, Samsung has come off worse, seeing some of its products even banned from sale in the U.S. pending a judgment. But, you know, with that said, Charles, early this week, Samsung was ranked as Asia's #1 brand in a survey by Campaign Asia Pacific and Nielsen. Turns out it beat out Apple and Sony, which rounded out the top 3 based on marketing and brand presence pretty much everywhere you go.